In this episode, I will explain standard deviation and how it should be used correctly. Most traders apply standard deviation on the wrong manipulation leg, which leads to inaccurate projections. I will show you where and when to apply standard deviation and how to identify the correct manipulation leg. So, let's get into it. So, the first thing we're going to go over is the Fibonacci settings. As you can see, we're using the Fib retracement tool on TradingView, and the settings we use are shown here. These are the settings that are basically used for standard deviations. And if you want to copy my color settings as well, you can see them here too. So here's an example of what the Fibonacci tool or standard deviation levels will look like on the chart when you use them. So first, let me tell you where exactly you need to place your Fibonacci tool to get these projections. Whenever price forms a liquidity sweep or a clear reversal pattern, this is what I'm looking for. In this example, price is moving down, it creates a low, then it pushes up and forms a high, and after that it comes back and takes that same low again. That right there tells me liquidity has been swept. Now instead of randomly placing the fib, I'm going straight to the manipulation leg, the move that actually swept the liquidity on the lower time frame. From that manipulation leg, I'm simply taking the high and the low of that move, and that's where I place my standard deviation or Fibonacci tool. Now let's look at some examples of placing the standard deviation. First example, here you can see price moving bullish. As price pushes higher, we get a liquidity sweep, and right after that, you can clearly see the manipulation leg. This is where I'm placing my standard deviation, from the high to the low of that manipulation move, just like this. Once that's done, look at how price reacts. You can see price moving cleanly into the 2 to 2.5 standard deviation range with no hesitation. That tells us the placement is correct and aligned with the actual delivery. Now let's move to another example. Here, price was previously moving bearish, and this time we get a sell-side liquidity sweep, which signals a potential reversal. At this point, I want to place my standard deviation tool from the high that actually took the sell-side liquidity down to the low of the manipulation leg. As soon as I do that, you can see the projections clearly. Price starts respecting the model and moves comfortably toward the extreme standard deviations. And this is why the placement matters. If your fib is placed on the wrong leg, your projections won't make sense. But when it's placed on the manipulation that swept liquidity, price delivery becomes very obvious. So now I'm going to tell you how I actually use standard deviations in my trading. First thing you need to understand is that I'm not interested in every level. I mainly focus on -2 to -2.5, and then -4 is my main points of interest. When price reaches these standard deviations, this is where I'm making decisions. Either I'm taking full targets, or I'm locking in partials if I'm planning to hold price toward the next deviation. If I'm targeting the -4, then the -2 to 2.5 becomes my partial taking zone, not my final target. Now the next thing I want to talk about is confluence. I never use standard deviations on their own. I always pair them with PD arrays or liquidity sweeps. Personally, I like to see these standard deviation levels line up with something else, a fair value gap, a breaker, previous high or low, or a clear liquidity pool. When you see a standard deviation aligning with a PD array or a liquidity sweep, that's when the level actually becomes high probability. On their own, standard deviations are just projections. But when they align with where liquidity exists, that's when price is most likely to react. Now let's look at some examples of how this actually works. The first basic thing for an entry is a liquidity sweep must happen first. After that, you need to identify the high or low that actually manipulated the liquidity, and this has to be before the confirmation. In this situation, you can see we first get a sell-side liquidity sweep. Right after that, there's no confirmation, so there's no trade yet. But here, this is where we get our confirmation. Now that confirmation is in place, I'm going to take the swing low that caused the manipulation and mark out my standard deviations from there. Once that's done, the next thing I want to check is confluence. I want to see if my points of interest align with anything. And here you go. You can see the first standard deviation aligning perfectly with an order block, which is a good sign. Then you can see the second standard deviation lining up with a large fair value gap, along with equal highs sitting right at that level. That's strong confluence. And because of that alignment, you can see how easily price moved into these projections, respecting the standard deviations almost perfectly. Here's another example. You can see that we first have a buy-side liquidity sweep, and after that, this move right here is the manipulation leg, which happens before the confirmation. Now from this manipulation, I'm going to mark out the swing high and project my standard deviations. Once we do that, look at the projections. You can see the first standard deviation aligning perfectly with a fair value gap, which gives us strong confluence. The second standard deviation is sitting much deeper, the blue one. And this tells me something important. Because the first standard deviation has more confluence, that's the level I prefer to target or expect a reaction from. Yes, the -4 standard deviation itself is a valid magnet, and price can absolutely move toward it, but we don't have to risk that. Targeting that deeper level completely depends on how confident you are in your bias and how price is delivering. And as you can see here, price ends up taking all the standard deviations very easily, respecting the projections almost perfectly. That's it for this video. If this helped you, make sure to like the video and subscribe to the channel. If you want to join my mentorship program, the link is in the description. And for any questions or doubts, you can join my Discord. I'll see you in the next one.